afternoon, everyone. It's Alyssa Corman, Ed Carson here with a look at the stock market today. It is Monday, April 1st, first day of Q2. And on today's show, we're going to be taking a look at two compelling ETFs as well as our stock of the day. But before we do that, let's take a look at the major indexes. We closed the day strongly higher with the Nasdaq leading the gains up about 1.3%. The Dow also up just about that much as well. The S&P 500 up almost 1.2%. We also have the S&P and the Dow hitting their highest levels this year for sure, back to essentially where we were in early October.
Yeah, it's pretty nice. Pretty strong start to Q2. You wouldn't have thought that, can we match Q1? Maybe not, but pretty good start here on April Fools. There was a lot of things. There was a pretty broad rally. This is based off of U.S. and especially Chinese manufacturing data, much better than expected. I mean, these global growth fears that people that have really weighed on the market, they're easing a little bit. Doesn't mean we're rip-roaring, but just a lot better there. Chips were strong, energy strong, financials. There was a lot of in-payment stocks. A lot of those meat and potatoes in there. So S&P 500 with a lot of those oil and financials did particularly well. I mean, it's been rebounding. And I guess one issue is that a lot of the stocks that were rising today were those that were well off their highs, like below their 200-day. Weren't too many breakouts today. Right,
and that's also what we've been seeing earlier in the rally as well. But we do still have some compelling names that we are looking at. And I think tonally, the action that we saw last week had a lot of people a little worried. But now with today's strong gains, perhaps we're in full-on rally mode again.
We're certainly a lot better off than we were at this time last week when we sold off for a second straight day.
Okay, and taking a look at semiconductor stocks, that group, we've seen some mixed action there. A breakout for the semiconductor ETF the other week, pulling back from that level, but now a strong gain for the Van Eck Vectors Semiconductor ETF SMH, which gained about 2.5% today to re-enter that buy zone.
Yeah, there aren't too many chip stocks that have broken out, and those that have are mostly extended like a Xilinx.
Right.
But this is one way to play it. It's also a good way to see the health of the sector. I mean, it's bounced back into buy range. It's gone up and down. This is volatile. Even when you buy an ETF for chips, it's still going to go up and down a lot. That's just the nature of that sector. But it's looking pretty good. Again, it's just a good sign when chips are participating in a rally. They definitely are.
That's right, and software has also been a notable group in the rally, and we want to take a look at Paylocity, which is in the enterprise software group, one of the leading groups that we're seeing right now. It's working on a base. Finished today just about flat after a little bit of up and down action throughout the day, but this is potentially a name for watch lists out there, given the fact that it is working on a base here and it has very strong fundamentals.
Great fundamentals. It's had 3 straight quarters of accelerating earnings growth. Analysts expect a 4th straight quarter of faster growth to 55% for that just ended March quarter. I mean, it had a really deep base from that correction, and that sometimes doesn't work. And you see it broke out, didn't really work, but now it's formed a new base, maybe a little bit steadier. The other action today is that, it didn't do very well. A lot of the top software names did not do particularly well. I mean, some of the software ETFs rose, but that's because some of the ones that were off highs, I mean, not terrible, but the ones that really were hitting highs sort of backed off a little bit or didn't move that much. But look, this is doing great. There's a lot of other good things about this stock.
That's right. You mentioned the deep base here. This is a pattern that we're seeing with other stocks, staging breakouts from these really deep bases, not quite working so well, but then the action after that, a little bit more composed and tighter bases that are forming after that. So better looking bases typically means a higher chance of success. There's a lot of other factors that go into it too.
Yeah, I mean, there's a reason why cup bases often tend to fail more than others, just because they haven't had that pullback. And in a way, some of these companies like Paylocity is having that pullback.
That's right, and we also want to look at iPay, which is the ETFMG Prime Mobile Payments ETF, extending its gains. Now, in this ETF, we have names like PayPal, Square, MasterCard, and Visa. So the payment space is continuing to be one worth watching, and that's seeing a lot of growth on the mobile side.
Yeah, it's always nice just to take a look at it. Just as a sector look, it's a good way to see this group doing very well. And it's in buy range. A lot of other companies are quite frankly, already extended or working on buy points. So this is one way to play that space. It's done very well. Relative strength moving higher. I mean, it's actually hitting all-time highs today. So that's payments have really been strong, and it looks like they're going to continue to be strong.
Right, and you know, you definitely can play ETFs the same way that we play stocks, but you also don't necessarily have to. No,
you don't. You can buy them just sort of wherever. Just know that when you're buying them wherever, it's, you know, you just treat them that way when you sell them too.
That's right. Well, thank you everyone for joining us today. We hope you check out investors.com for all the latest stock market news and analysis. You can also check out our content across social media, from YouTube to Facebook to Instagram and Twitter. So make sure you stay up to date on all the latest. Thanks for watching, everyone, and we'll see you back here tomorrow.